had a pretty bullish case on crypto, saying that the industry could be $40 trillion in 10 years. Just to put that in perspective, that's the size of each of the U.S. stock markets and the U.S. bond markets right now. What's driving that bull case for you, and what do you think could derail it?
Sure. Well, I think at a real macro level, when I look at Bitcoin, I see it as a store of value. Today that's obviously dominated by gold, which in round figures is a $10 trillion market today. And when you have something that's not just a little better, but 10x better, 100x better, that tends to dramatically grow the market. So when we look out 10 years, you think the store of value market could be $40 trillion. And if Bitcoin gets half of that, they could get more. You're looking at $1 million Bitcoin.
Oh, well, it'll be an interesting 10 years. We appreciate you.
$40 trillion market cap, and that puts Bitcoin at $1 million. Those are the predictions by my friend Luke Kerner, who will be joining Banter on Friday. Welcome back, guys. Welcome back to our newest show called Microdose, and this is exactly what the show is all about. It's a microdose of crypto content for those people on the move who are time-starved, and what we guarantee you is that in just 10 minutes, you'll get one shot of crypto content. And there's no side effects to this thing. No side effects to this thing. So welcome to the show. Subscribe to the channel, like the content, let people know we're launching this new show. And now, since I only have 9 minutes left, let's get on with the big stories in the news today, shall we? Well, let's look at the prices, and you can see that Bitcoin has come down a little, but we expected Bitcoin to come down a little because Bitcoin has been on a tear for about 11 days. And after 11 up days, well, what do you expect? You expect the market to come down a little. But we can see that the fear and greed index is neutral and the market doesn't look panicked in any way. So this is probably a healthy retracement from what was probably an overheated market. If we dig into the sectors that are performing today, most sectors are in the red. The sectors that we should probably be looking at are the ones that are going up. That is the Terra ecosystem. Despite everything going down today, the Terra ecosystem is up 12.3%. And gaming, NFT gaming, specifically down about 6% today. Let's look at what is driving this market content. The first news that is driving the market content is news of a potential whale, the biggest whale that we've ever seen, buying Bitcoin. And not buying it on exchanges, but specifically trying to hide his purchases in OTC type transactions. The news was first picked up by Ki-Young Ju, who's the founder of CryptoQuant. And he says, someone is buying Bitcoin, a lot. 99% of transactions are happening outside of exchanges, possibly OTC or over-the-counter deals. If big names announce they're buying, bears could be in trouble. And he gets this information by looking at the on-chain data, which shows that large amounts of Bitcoin were transferred. In fact, unprecedented amounts of Bitcoin, $130 billion worth of Bitcoin were moved on chain, but only a very small part of them were moved on exchanges, as you can see over here. The conclusion is that it looks like it's a big whale trying to buy Bitcoin OTC so that people won't see the action on exchanges. And if it's true, if 130 billion or even 50 billion is bought, then we know that it can't be an individual, and we should be looking to the big organizations like Apple, Google, Microsoft. Who is it? Let us know in the comments who you think is buying $130 billion worth of Bitcoin. And there's more on the story in our show. Click on the link below and you can watch the main show today where we spoke about this story a lot. All right, let's move on to the next story of the day, and that is the story about Gary Gensler. Gary Gensler is the head of the SEC. He is a former MIT professor, and he has said, or he's hinted, that he ain't going to be a cheerleader for DeFi or for crypto. Despite the fact that Gensler is an MIT blockchain professor who lectured blockchain for many years, Gensler says that he is looking to regulate DeFi. In an interview with Bloomberg, he says, while I'm neutral on the technology, even intrigued, I spent 3 years teaching it, leaning into it. I'm not neutral about investor protection. If somebody wants to speculate, that's their choice, but we have a role as a nation to protect those investors against fraud. He went on to say that he believes that perhaps the easiest way for government to get a quick handle on crypto trading is to regulate the centralized exchanges. He also explained that if firms advertise a specific interest rate on a crypto asset, that could bring loans under the SEC oversight. So any plans that we had that this blockchain, ex-MIT blockchain professor was going to be favorable to crypto, he's now showing us that he ain't going to be a cheerleader. And this has put the Bitcoin ETF under the spotlight again. It kind of seems that right now, Gensler's got bigger fish to fry, and that a Bitcoin ETF is not the first thing on his agenda. What else? FTX? Let's talk about FTX.
ETF, and the crypto ETF would certainly be the jewel in crypto's crown, but I don't think that we're going to see an approval of an ETF anytime soon. Later today, Chairman Gary Gensler of the SEC is giving a speech at the Aspen Institute Security Forum, where he's indicated that he's going to lay out his plan for regulating crypto. I think that Gary Gensler is very passionate about consumer protection and wants to see more robust regulation of the underlying spot market for crypto. And I don't imagine that he's going to approve an ETF until we see some sort of regulatory regime in place.
What would I do without Freddie reminding me that we have videos that we need to show? Thank you, my friend. Thank you, producer Fred. Love you madly. All right, let's talk about the next story in the news today, and that is the story about FTX. The FTX exchange that just raised $900 million from the most prominent VCs, including Andreessen Horowitz, Sequoia, Multicoin Capital, and all the biggest names in the industry, is now expanding its NFT offering. And if their NFT offering is going to become anything like their normal trading offering, then FTX has a huge chance in the NFT market. They announced today that they are creating an NFT-focused sports and entertainment marketplace. Crypto exchange FTX is launching an NFT marketplace for prominent sports and entertainment brands, the company announced on Monday. And they're doing this partnering up with Dolphin Entertainment. Now, Dolphin Entertainment is a big sports PR group, and they're looking to do things. The marketplace will focus on brands within the film, television, music, gaming, esports, culinary, lifestyle, and charities and charity industries, FTX tweeted. So it does look like FTX is going after NFTs, and that's of course no wonder, given the explosion of NFTs. I've said to you guys before that I've never ever seen an industry that has exploded like NFTs have exploded. Not in crypto, but in anything in the world. I've never seen an industry doing this. And the majority of this is actually being built on Ethereum. So this is great news for Ethereum, which had a great day today, despite coming down today. But despite Bitcoin coming down today, Ethereum kind of held its own. And we know that the Ethereum pair on the Bitcoin chart is looking healthy. Our man Richard Hart has done it again. And I know the media aren't covering the story because of all the speculation around it. But Richard Hart has managed to raise a huge, whopping $15 billion for Pulse Chain in what they call the sacrifice stage. In this stage of the Pulse Chain raise, users can send money to a contract and they can sacrifice it by donating it to free speech. So Richard, even though a lot of the money that has been transferred into the contract is in the form of HEX, and there is speculation that this HEX is actually Richard Hart using his HEX from the origin contract of the HEX project, which he owns, or which he speculated to own, he does seem to have raised over $1 billion in other currencies for the new Pulse Chain project that he's talking about. And whereas the media are very skeptical about this and not many people are talking about it, CryptoLark published a long tweet storm about HEX. And he says, so Pulse Chain is launching soon. Thread. In total, more than $700 million was sacrificed for Pulse Chain because, it's not a token sale, it's just free speech. The terms of the sacrifice might make you think that these funds were burnt. They weren't. 65,000 ETH have been withdrawn. But sneaky, 700 mil was not the end. It seems that more than $14 billion were raised, predominantly in HEX. Stunning figures considering 3 or 4 days ago it was 700 million. That is pretty interesting, isn't it? Who would have 13 billion HEX lying around? Probably Richard. The majority of Pulse Chain airdrop will now go to Richard, like 90%. He also gets the bag of the millions of USDT, USDC, and ETH sacrificed. Laugh out loud. and reclaim all of his own hex he put in. I'm sure all of this will be very difficult to prove, but wow. But that aside, will Pulse Chain go on to be a great success? Well, people sure do love Richard. There are literally people calling him Jesus because Hex mooned so hard. Those are the same thirsty investors that will hope to get rich quick in round 2 on Pulse Chain. But now we start to run into the reality. Beyond the rabbits fanboys, who will actually build on Pulse Chain? It is one thing to launch a token like Hex and get people on board, to lock the tokens in a Ponzi and Ponzi the number higher. It's another to build an ecosystem. Many have tried to make a faster Ethereum, and yet none have taken to the mantle. Not to say Pulse Chain needs to kill Ethereum to make you rich, but actually attracting TVL and devs in a highly competitive blockchain environment is hard. Ask dozens of other chains that have highly talented, well-funded teams who are pushing real and meaningful innovation how hard it is. Then we must question Richard's mixed reputation in the crypto spec and how many actual builders will choose to build on Pulse. Probably not many, in my opinion. Most will keep building on reputable platforms like Polygon, BSC, and Polkadot. Because this is crypto, this coin could do very well because enough naive people just don't care. But Richard Hart will likely control the vast majority of the supply, and building a real network effect will be very hard beyond the initial hype. And you can see that Jason Pizzino, also from Australia, commented and said, fantastic work, Golok. We know it'll fan out a lot on deaf ears, but nonetheless, your efforts on this are greatly appreciated. So not everyone's a Richard Hart fan. Let's see what happens with Pulse Chain, and we will get Richard Hart talking about Pulse Chain on the channel in the next couple of days. 2 more stories for today, and I know I'm going a little bit over time, but you'll have to forgive me. Monero's founder, Ricardo Spagni, Monero's lead maintainer, not founder, Ricardo Spagni, has been arrested in his private jet while refueling in Nashville, Tennessee. And ironically, he hasn't been arrested for anything to do with crypto. He has been arrested in the United States for a crime allegedly committed in South Africa 10 years ago. According to the allegations, Ricardo Spagni, an employee of Cape Cookies, Spagni intercepted invoices from another company, NSYNC, related to information technology, goods and services it had supplied to Cape Cookies. Spagni knowingly used false information to fabricate similar invoices purporting to be from NSYNC, relying on details including the company's tax number and bank information. Spagni then inflated the prices for goods and services. Now, we spoke about this in an earlier show, and go and click on the link below to get all the information, but we think this is garbage, and we don't understand why for a $70,000 fraud, Spagni would be arrested and there would be an extradition talks from the US for something that happened in South Africa. Just sounds absolutely crazy. All right, in the last story of today, CoinJar, the Australian exchange, is partnering with MasterCard to roll out Australia's first crypto card. And the reason why this is such an exciting development is because Australia has very strict regulations, and we're now getting a crypto card in Australia. CoinJar allows its users to select which crypto they would like to spend, which it then converts automatically to Australian dollars upon purchases with no need to without the need to pre-upload the card. The card features no monthly fees with a transaction fee of 1% that is then returned to the user in terms of CoinJar rewards. So very, very, very promising to see MasterCard also getting in with PayPal and Visa and everybody just fighting for this crypto space. I've gone a little bit over time. I'm Crypto Man Run. I will see you guys again tomorrow, 5 a.m. EST for Sheldon Show, 10 a.m. for the main show, of which the description link of today's show is in down below. And this show, same time, same place tomorrow. So I will see you again tomorrow. Until then, trade well, my friends.